Novo Nordisk has seen a significant decline as the company lost over 55% from its highs in June of 2024. In my last video on the company, I stated that $82 might already have been a good entry point for the company, considering the growth prospects as well as the valuation. In this video, we will first analyze the reasons for this decline, answer the question if this was justified, and then evaluate if the current prices might offer an even better opportunity. So what caused the sell-off? The first reasons were the disappointing clinical trials, as the weight loss results of the company's drug, CagriSema, failed to meet expectations. Patients only achieved an average weight loss of 22.7% in their first trial and 15.7% in the latest published trial, compared to the aim for 25%. There has also been increasing competition for the company. Eli Lilly's weight loss drug Zepbound has been able to achieve high weight loss metrics of approximately 21% so far. They also just cleared the first trial for a weight loss pill that is showing similar metrics to Ozempic. This led to an overperformance from Eli Lilly compared to Novo Nordisk. The current geopolitical turbulence also negatively impacts the company's stock price. President Trump's statements about the potential annexation of Greenland, and especially the proposed trade tariffs on goods manufactured outside the U.S., dimmed the outlook. But was this sell-off justified? To summarize, the decline was mostly caused by two things: tariffs and competition. As can be seen here, the U.S. is the most important market for weight loss products, meaning that potential tariffs on these drugs would hit Novo Nordisk especially hard, leading to slower, none or even negative growth in this segment. Because of this, the company is buying a production site in Indiana to avoid possible tariffs and the loss of growth. The whole tariff situation is very hard to predict. I would argue that potential countermeasures by the EU and other countries should also negatively impact American pharmaceutical companies, which in turn could lead to a reduction or discontinuation of tariffs on medication. If we, however, consider the very high share of obesity in the U.S. and the high reliance on this market, the U.S. is in the driver's seat, at least in this niche segment. Novo Nordisk is battling with competition, as can be seen in the stagnation in the GLP-1, insulin, and total diabetes market share after 2022. However, the achieved growth rates were still very impressive, ranging from 13% in 2021 to 29% in 2023. Combining these two metrics, the company seemed to grow in line with the market rate, as there hasn't been any meaningful change in their market share. But is this enough? To answer this, we will first calculate the required growth to justify the current valuation. Required growth. Assuming the profitability and free cash flow conversion to stay constant at the average of the last 4 years, the company needs to achieve growth rates of 6.5% each year until 2032 to justify their current valuation. Does this match the growth potential? Growth prospects. Like mentioned, the company has been growing close to the market growth rate for the last 3 years, which is why we use these rates as our baseline. For the diabetes care segment, experts predict annual growth rates ranging from 8.9% to 12.7%, giving us an average expectation of 10% per annum. In the obesity care segment, studies are guiding for growth ranging from 25 to 31%. For some additional margin of safety, I assumed a growth rate of 26% per annum for the weight loss medication. Weighing these growth rates with the current revenue of each segment, we get 13.3% as the expected growth rate for Novo's whole business. So even when only anticipating 50% of the market growth, the company manages to exceed the growth of 6.5% needed to justify its current valuation. The management itself is even more optimistic, as their latest guidance for 2025 starts at a growth rate of 16% and reaches up to 24%. Keeping this, the aforementioned reasons and the hefty PE ratios of 2023 to mid-2024 in mind, some kind of decline was justified, but not to the massive extent we have seen. Even if the company should only manage to grow at 50% of its underlying market growth rate, the current valuation can still be considered fair and justified. I personally, however, believe that Novo should be able to capitalize on their scale, know-how, and capex to to grow at or even above the predicted market rates for the obesity and diabetes medication market. Realistic growth. With predicting the very well achievable growth rate of 13.3% per annum, we get a fair value market cap of $424 billion, indicating that the company could currently be undervalued by 56%. Conclusion. The risks mentioned by bullish investors and analysts are valid points that need to be monitored in the future. The massive reduction of 55% in the stock price, however, seems to be highly exaggerated, as the company needs to only achieve growth rates of approximately 6.5% in the future to justify their current valuation. With underlying more realistic growth rates of 13.3%, the company is offering upside potential of up to 56%. Considering this, and the very high quality of the business, I am upgrading my rating from buy to strong buy. What's your perspective on the stock? Let's discuss in the comments.